Well, hi guys, welcome to this week's show. We really have an exciting show for everybody, and I trust you'll enjoy it. And as usual, any questions that you may have, please feel free. Just post them in the chat box, and I'll get to them. So, what we promised today is to have a look at the 10th of March, where I earned 10% profits in a few hours, and we'll talk about that. But just before we do that, let's go through our usual weeklies. It's a daily setup that I do, but because we're going once a week, I want to show you how I set it up. So remember, I'm trading the 5-minute chart, 5-minute time frame, and this is the thing that goes through my mind. There are steps and procedures that I go through each and every day. So, and if you trade in a 5-minute time frame, or if you trade in anything lower than an hour or lower, I would suggest you adopt the same approach. It will help you just to be prepared for the day. So let's have a look at a few things. So there's 3 currency pairs that I'm trading. It's the euro dollar, USD CAD, and the USD yen. So you hear me talk about the euro, the CAD, and the yen, and I'm making reference to this currency pairs. First thing, of course, that we do is have a look at the daily time frame. Now, remember, we are already in the month of March. If it was the beginning of the month, you would start all the way back up on the monthly, then go down to the daily. The weekly time frame is something that I look at every Friday morning. So if you're going to be trading on a Friday, the same approach that we are using here with on the daily time frame is exactly the same approach that you should use on a weekly time frame, starting with the week, because the Friday, the weekly support and resistance becomes critical. So all we want to be doing on the daily time frame, we just have a snap view of what is unfolding on the daily time frame. Last week, I spoke of leg 1, leg 2 extensions, and the previous week I spoke of measured moves as providing us hidden levels of support. So you see what I currently have right here on the daily. I have inserted my leg 1, leg 2 extension. So there is a leg 1 of a move. You can clearly see this is the first leg of a move that unfolded, and it was broken into 2 parts. So itself it is leg 1 and leg 2. So that would have given you an area to either take profits, completely close your trade, or just take partial profits if you want to hold it and see if you get a second leg. Market turned here, and that's the point where I put my 10 points on my leg 1. There's a pullback, and there's a leg 2. So at this stage, should the trend continue, the bear trend continue, what is likely to happen is that the market will like to test down here. If it does the full leg 1, pullback leg 2. But we don't know that. So this gives you invisible levels of support and resistance. It gives you where the market could go. And that's something that you just keep on your chart. Another thing to look at is any potential measured move. So we had the market turning here. So the market broke beneath that, and I would have thought, oh, okay, how far would the market likely to go? And the market would likely to go down to this level. So I just keep that marked in case we have a break beneath that and the market gets here. If it turns, I won't be surprised. Then I have this thick blue line marked here, which is a significant level. It's kind of low that we have, but look how far back it goes. When we pop back again, we're into November 2020. So that's a new low that's been created for this particular year that we. So I want to keep my eyes on that and see if that's going to be held up. If the bears are going to try and want to break beneath that, the bulls are going to try and hold up against that, because that's a key level to keep track of. Then, of course, remember what we do every day. Just mark the high and the low of the previous day. The low on the 5-minute will be marked in red, and the high in green. So if I just pop down to my daily, my 5-minute time frame here, there is the low of yesterday, and there is a high of yesterday. So I just keep those marked. So the same kind of thing on the currency pair. The currency pair that you're trading is the Canadian. Have a look at that and see there's anything significant, that may come into view while you're trading the lower time frame. And if it does come into view when you're trading that lower time frame, then you have to take that particular trade. So let's have a look at it now. On the CAD, all we currently have is that low there, something that I've marked. And look at what happened. Market tried to break beneath it. Buying pressure, the tails created there by the bulls. And if you ever look at yesterday, bearish candle, but you got to ask yourself if the bears were strong enough yesterday, they should have given us a significant close beneath that, but they failed. So just something to keep in mind, when you are looking at your lower time frame. There is significant action taking place here. So you don't want to just wake up and go short without considering what's happening on this time frame. Now, don't worry about this yellow here. That's the day that 10% profit that we look at just now. So again, I'll mark my low of yesterday, high of yesterday, and if I come to my currency that I'm trading on the 5-minute time frame, there's a low of yesterday. And there's a high of yesterday. And again, that thing I pick up from today is the open of the day. And I just mark it in there and I keep it there. I mean, you can, if you have to scroll back, you could see there's the open of the day. There was a low of yesterday. So I just keep that in view so that that's to come into my time frame, because I don't want to be scrolling through all my charts during the day. Really, you tend to get lost if you do that. So just try and mark these things as early as you can. So we'll come back to that. Then again, same kind of thinking on the yen. Now, here's what's interesting about the yen pair. Kind of spoke about measured moves again a couple of weeks ago and last week. Look at where we're going sideways with the yen. It's a measured move of that. So with a spike pullback channel, that channel, three legs in it, 1, 2, 3, from the low of the channel to the high of the channel. If you had to break above that, which market did, you might likely to do a measured move, which it did. If you just looked at the last leg of that channel again, that's a measured move. So although you can't see them unless you mark them, these are levels that professional traders, institutions, they see it, robots, they see. So you need to be careful when you get there, either take profits or just observe what's happening price action. Now we need to move sideways, and so it's no surprise what's taking place. But we trade the 5-minute time frame. So let's have a look at it. Look at the low of yesterday, the high of yesterday, and the open of the day. And I've already marked that now. Question may be, when did I mark that? I marked those much earlier on, because I got up to look at the Asian session earlier on at a couple of hours, so I was fresh enough now to look at them, look for trade opportunities, and to see what we get. Now, I want to focus on the 10% of trades, but I just want to show you something interesting that happened. So in the earlier session, in the Asian session, I didn't find any setups that was comfortable to trade. Okay, so that's what I consider as the actual open of me trading the Asian session, the actual open of the Tokyo Stock Exchange. So from there, nothing according to my strategies. So when I say I didn't find something I want to trade, does not mean there's nothing that's set up. When you come into the market, you've got to be absolutely clear about your strategies, because you can trade every single candle or bar that you see. You can go in as a scalper. You can go in looking for, if the market is long, couple of trend bars long, I'm just going to jump in, be able to manage my trade, or a couple of trend bars short, and it's always short or jump. We can do that. But I trade my strategy. So I didn't find anything that I wanted to trade, so I just let it go. But I'll show you where I took a trade. So not on this currency pair, not on the yen. And still at this present moment in time, there is nothing for us to look to trade here at the present moment in time. Earlier on, you could have considered taking a short and saying, well, maybe I'll take a short and see the market will come down here. On the Canadian, earlier on, I didn't see anything that I wanted to trade as well. Okay, so that's when I came to the market, and might say, well, why didn't you take any of these trades? Well, these are pullbacks, right, to the moving average, but a pullback has to start from a breakout, and I did not see a breakout that convinced me that this was a legitimate trade that I wanted to take. We did go positively in the bullish direction, but be that as it may, we won't just jump into a trade because after the fact it went well, then we're playing a dangerous case game. But had this been a couple of strong trend bars, so breaking out above that and follow through, and then a pullback, second pullback, I would have comfortably taken that trade. So nothing in that as well. Okay. So at the open of the European session, I'm in the market and I look to see if there's trades that I can take. What I've seen happening so far is first leg and a pullback. That's a pullback. And I'm saying market should get into that. So that's what I said earlier on. And we're kind of pulling back. It's a pullback to the moving average. We don't know whether it's just going to become a trading range pullback, in which case we look for breakouts either way. And also there was a measured move. You see this going sideways. It's a pullback from this leg one. The measured move above that gives us potential turning area within there. So nothing to trade until we clearly get out of that. If we have a look at the euro, took a trade in the euro earlier on, not in the agent session, but just I'll tell you just now where I took the trade. So in the earlier session, there's nothing for me to take a trade on. If I had marked, just hold on a second, if I'd done that earlier on, that's a trading range. Still with that kind of trading range, there is nothing I would have wanted to trade there until I got down there. So I didn't take a trade there, but earlier on, a couple of hours ago, I jumped into a trade, and I'll show you I jumped into a trade. Okay, so this is an interesting opportunity that came up that I took, and if we bear in mind what we kind of shared in the past couple of weeks, these hidden levels of support. One of my strategies is to take a trade off a micro double bottom. A micro double bottom is a double bottom that occurs just over two trading bars, or maybe three. Not the typical trading range double bottom where you have a low, and after several bars, an hour and a half, you have another low, then you look for a high low, or inversely double top. So I took a trade here. I'll show you that briefly. It was one-to-one trade. And the reason I took that trade was because of this. There was a measured move. So the market went up, came down. Between that height and that low, I said to myself, well, if the market breaks beneath that, it's likely to get to this level down here. Okay, that's a measured move. And then we did get to that bottom, the market pulled back. And as the market pulled back, because we're at the bottom of the trading range, I don't like to jump into any trade at the bottom of the trading range. So that's why I didn't jump into that. But I was saying if we break beneath that, we might get to a leg two, which is the same extension of this leg two, which we had on the leg one before the pullback. So leg one from the top to where the pullback started, and then a resumption of the trend. And where would that go? There is the potential line of the leg two. So within there, my strategy says if I get a two-bar reversal, micro double bottom in that zone with a decent signal candle, then I'm going to take the trade. and aim for at least a test of the beginning of the leg 2. So I took the trade just above there and stopped beneath here. And my target was to get to that level. Then, when the market went up, pulled back, like my leg 2 coming up potential at that level. And when we got there and started pulling back, I took the profit. Now, this is where you kind of say, oh, bummer, what happened? Because the market moved up. Well, it's that 1-to-1 could have become a 3-to-1. But, I took my profits because I was aiming for a test at that level. And, that trade is it's within here somewhere. There's a trade, 17th, just there. Okay, you can see that 5.8. So, I'm happy with that trade, 1-to-1 trade. I'm disappointed that's happened without me having an opportunity of going. How would I have gone into that trade? Well, at a test of the point that I was looking at, if I'd had a pullback off that test, coming back to the 10 moving average, if it's just a high one, which is a pullback and the resumption of the signal, or if we went sideways to the 20 EMA, I would have taken that trade as a test, pullback, test the moving average, and continue. But I didn't get that, and there's no ways I'm going to jump into the trade. I just have to sit back and watch it and let it go. The reason you do that, because remember, you've got to work out your strategies. Remember, we manage risk, reward, and probability. You can manage your risk. You can manage your risk based on your risk parameter and appetite. You can manage your reward where you want to take your profits. Probability, I always say whatever strategy you've got, for me, my best strategies are always going to the market saying there's 60% chance of success, of winning, and 40% loss. So, out of 10 trades, I will win 6, I will lose 4. I know, my pullback strategies are probably 70-30 or 75-25, but I always work on average 60-40. But when I'm trading reversal strategies, major trend reversals, which we talk about as they appear, those are 46, which means out of 10 trades, I'll lose 6. But on the 4, if I manage them well, I'm going to make some pretty good gains. So I have no problem with that. Now, here's what's interesting here. We've broken above that previous trading range, which is a previous high. So that's a decent breakout candle. We then have follow through. Remember I said, the breakout, you need follow through. So that's the minimum the bulls could do to give us confirmation that they've got strength at this stage. So what you got to wait for now is to see whether we get a decent enough bounce off the 20-moving average and see how we can trade that. Now, why the 20, not the 10? Because the reason I use the 10, it's in a very strong trend, and I'm really looking for the first pullback in a strong trend just to bounce off the 20-moving average. So if we'd hit that test and we'd come back and given us a setup here, testing the open of the day, which is the purple line, coming off with 10-moving average, then we could progress. But beyond that, then I got to wait to see what happens on the 20. Now, although we have confirmed breakthrough here, breakout candle and follow through, we still have to be cautious, right? Because the market might go sideways for a bit, because of all this bullish pressure, and also the bears might want that breakout to fail. Does that bother us? Doesn't bother us. Just wait for the setup, which we are looking for. You go back to your strategies and you wait to see if it sets up. If it does, then you take the trade. Now, so that's a 1-to-1 in the bag, which is perfectly fine. Nothing else setting up there. CAD is just going sideways, nothing else setting up there. So what I want to do at the moment now is just go to the 10th of March and quickly show you. I want to use as much as possible of the last 40 minutes just to talk about how that 10% day. Okay, now what is interesting, and I think just from narrating how things unfolded on the day, you should hopefully be encouraged with your own trading and realize that it really, especially if you're trading on the lower time frames, it really does not matter what time you come into the market. So if you're working, if you're busy doing something, as long as when you come in, you are focused enough to take a trade. If you're not focused, believe me, it's better not to take the trades, because I do know how it's easy to make mistakes on any time frame, but more particularly on this particular time frame. So let's have a look at it. So here, I came into the market 155, so that's before the times and changes, etc. And I had a look. I said, well, there's a decent enough breakout. It's kind of a breakout as you follow through. The moment I see a breakout and follow through, I'm comfortable to take a trade. I wait for a pullback, and that looked like a decent. It was a decent enough pullback coming off the 10 EMA. Decent enough signal. Let's quickly have a look at the question on the chart. Okay, covering that. All right, so excellent. All right, guys, our apologies. We have something that pops in on my screen, the brown box. So I'm not quite sure where that comes from, and I think it's really distracting for everyone. I'm just going to take a screen for the admin screenshot and I'll show that to the admin team. So in any case, let me try not to move my mouse too much and talk through. I don't think it makes a difference. So I took that trade. Now that's a strategy trade. I would take that any day, anytime. And I took that trade, and my stop was above here, and immediately within the next candle, I got stopped out. So what do you do when you get stopped out? If you get stopped out and you've taken the trading strategy, nothing. Just you stay in the market, right? Because we're speaking about probability just now, a few seconds ago. 60-40 or 40-40 to 60 or 50-50 or 80-90, whatever you may want. You may know, hang on a second, I've worked out my strategy. I know out of 10 trades, I'll win so many trades. What you don't know is the distribution of that probability distribution. You don't know, when it's going to happen. So I got stopped out, and I said, well, that's fine. Let's stay in the market. Let's see if we get another setup. So the market pulled back at that stage. Did not close above my breakout. So I just thought, well, this really is it's a deep pullback, testing out the breakout point. So if I see a second entity go short, I am going to take the trade because I'm still within a breakout. The pullback is deep, deeper than I thought it would be. Then I got that setup. So I took the trade right there. At that point, I was able to do a measured move and say, well, if the market does break beneath this, chances are it's going to go for a measured move. But don't worry about this red line. Remember, this is from today's trading. So you can actually just take it off. It's not a problem. I'll put it back on when I get my trades. So that's where I say, well, the market may get there. Now, whenever you see a measured move, I always like to put the take profit just a little bit above that, in case the market turns. So that's where I'd like to take my profits. Now, there's two ways to take the profits. You can just set them automatically. There's take profits, take profit level if you're not going to be in the market, or if you're still learning how to manage this, because since they're moving pretty quickly, Or alternatively, you can just watch the market, and because you might get there and get the market accelerate, in which case you just tighten the stop. And or if it reverses, you close your trades at the market. That's really up to you. But if you're starting off, just put a take profit and see what happens. So like today, I put a take profit just near where I thought the market would turn. It carried on, didn't leave it open to manage, and I'm happy with that. So I took that trade. Now, guess what happened? We had the market resuming down a bear trend, so it broke out beneath that level. We had a follow through, and then the market turned. So that setup to me was exactly the same as that. Market pulled back, test moving average, distance in a candle, put my entry beneath that, and at that point, I took my profits off at that level. Now, that, if you were to consider that, so I was in the market from that particular moment, and at that stage, I think I probably stayed just sitting around. But if we just looked at that, that's a couple of hours of trading. Then later on, during this day, I didn't get into the market, so there are other opportunities. But let's not worry about that. Let's look about when I actually came back into the market. So I came back into the market later on in the day. So I didn't worry about what I missed. That's where it goes. And what we had at that stage, is breakout above here. Okay, market came to test that level, and I'm comfortable with the market having tested that. So okay, so if market broke above that, and then we had a test down at that level, so the bulls are trying to hold their advantage. And so the bears have tested that, and if you ever look, it's always important just to start to train your eyes to say, well, let me look at the nature of the price action to that test. When you're getting down here, are you seeing consecutive strong bear trend bars or not? We're not seeing that. What we see are consecutive strong bull trend bars. Whatever the word strong bull trend bars. So in all of this, the bulls are much stronger. Okay, so when I get that attempt by the bears to break beneath that and reverse the breakout and it's turned, I'm confident that the bulls have strength. But I gotta wait now for my setup. So you always want to see your setup. In this case, I'm considering this as a double bottom. Market broke out, came back, but I now need to wait for the entry that I'm gonna take. So when I saw that attempt again to reverse and a decent reversal happening here after the double bottom, happy to take that trade. So I put my order above that, and then I said, well, I'm just going to wait and see what happens if we get to the height of this. So market went up, pulled back, and I'm holding on to my trade because my argument, my thesis is still valid. Then we had this strong candle here, and when I see that, I just take my profits because the chances of immediate follow through they're pretty minimal. There usually is a pullback, but that's a surprise candle. It could be a news candle. It could be open of next session. It does not matter. But when I see that huge surprise candle, I want to take my profits, just wait a few bars, or alternatively, if I'm not in a trade, I just wait. There's nothing that I do. Okay, just checking what's on the chat. Okay, yes. So that was the what's that, third trade on the euro. Then there was nothing else that set up that I was prepared to trade. This yellow thing, which I can take out, is just to show you the importance of the open. So if you trade in through open, to different open, like that, from one when there's an overlap of an open session, So the US session opens during the European session. I think of that as the way I think of red news. Okay, because you can have sudden reversals. Three things can happen in the open. You might have just a trading range with a breakout mode, might have a sudden reversal or a new trend starting. So unless I'm in a trade that I'm managing, I just stand back and watch. So we had a reversal there, and there's nothing that I was comfortable to trade at that stage. So I just let it go, but I'm watching what's happening. So now we're coming down here, and that's a double bottom, right? So where we were, where I took the trade, where this large candle began, market came back and tested that. But look what happened. A little pattern created here. This pattern, whenever you see any form of a triangle, it could be convergent, it could be divergent, it could be just three pushes or a wedge, breakout mode. And we'll get a chance to talk about that as in one of the future sessions. But breakout mode is very critical because it says to me at this point, where the double bottom, the market is now going to break out in one direction or the other. And in whatever direction it breaks out, I'm going to wait for a pullback. And when I get a pullback, I'm going to take the trade. So here we had an inside candle. Okay, then the market started breaking out above that, came back again into the apex or the middle of that triangle. You could always extend that if you wanted. Okay, so anything here is still part of that breakout. So first attempt breakout, pullback, another attempt, then a follow through. Then now I'm happy out of this particular pattern. I'm happy to say, okay, let me go for take that trade, pullback off that trade. If you didn't take that for any reason, you could always wait and see if another opportunity which could have had. But I took my trade there. Then I took my profit at just 1-to-1 now. Let me put that in there. So the height of that triangle, the height of that pattern from the low of that breakout pattern to where I took my trade, I'm saying, well, the market might get to 1-to-1. So just put it there and take profit there. Could have done what happened today and carried on. Well, that really doesn't matter. So that's on the 10th of March for the euro. And I'll show you guys. I mean, the trades are all in here. So I'm showing you what actually happened on the day. So they're all on the 10th. You can see the first two trade first two trades, euro was a loss, and I go to CAD was a loss, and there's all the rest of the business. So this 10% profit is actually real money that happened on the day. So let's have a look at the CAD quickly. USD CAD. Just go back to the 10th of March. Okay, so 10th of March, USD CAD. There we go. So I had a look now. Remember earlier on, I said if I get a pullback to the moving average of the 10, I'll take it. I didn't take one earlier on because I didn't see the preceding breakout. So here is a classic. There's a breakout above that pattern, breakout, follow through. Now I'm waiting for my pullback of the 10 moving average. There is a classic. You gotta take that. In effect, that probabilities. You don't know the distribution of the trades. That's part of the business. So I took that trade, had my stop down here, and got stopped out. Okay, that's fantastic. I don't know when the loss will come, but then I'm gonna say, okay, the thesis still holds. There is a breakout. As long as market holds above that, I am going to look to take a trade. So the market attempted to break down, failed, and then when I had that reversal pattern here, put my entry above that. And again, I'm going for measured moves. Now, you can begin to see the absolute importance of measured moves and where to take your profits. Now, the reason they're important is if you don't use the measured moves, what could happen simply is you say to yourself, well, let me take a trade. I'm going to put my take profit there, and I'll be able to manage it. You know, chances are you may not be there, whatever time frame it may be, or as strong as a particular pattern looks, when it gets to a measured move, you could have a reversal. And if you set your profits much higher, the thing can reverse, the market can reverse, and you end up getting stopped out and be like, hang on, but I had profits in the trade, what happened? It's just not knowing how to work with measured moves. Invisible levels, they're invisible to the eye, but they do exist because the market tends to make these measured moves and good areas to take profit. So having me stopped out there, took the trade there, said I'll take it out, take off with the measured move. Now look at what happened. I had off here, the breakout and follow through, and I see a breakout and follow through. What I'm going to say to myself is, let me wait for a pullback because there's a breakout to my 10 EMA. If I see a setup, I'm going to take it. So I'm already in the trade there. I see the setup, still at the same profit level that I had. So I took the trade there as well, took the profits off there. Interesting thing, here is a combination of the two things we spoke about. So spoke about in the previous 2 weeks. So if you go back to the history on actions to work, you pick up the presentation. One is a measured move, take profit. The other one is leg one, leg two extension. So market is breaking out. There's a pullback. Where is the market likely to turn? So leg one, pullback, leg two. So almost in the zone. Now, one thing that I've learned, if you want to put your take profits to manage your trades, don't try and manage them above here. So let me take more profit. The market might turn somewhere before you get it. So rather take your profits early. And if it continues to move, that's fantastic. One of the things we'll talk about is some other point is how to increase your profits in quantum leaps by taking some of the profits you've made in the day and increasing risk instead of 1%, which I will start off with, you could go 2%, whatever the case may be, but using money that you already banked. Okay, so if you've done that, if you bank some money earlier on, that's why I love trading the Asian session. If I got enough energy to get up, if I bank some money there, very happy. If I see a decent setup, instead of going 1%, which is my standard risk, I can take 0.5% of the earlier trading, add it in, and start to make young profits. But we'll talk about that at some stage. So again, this is in that same couple of hours zone that we spoke about. Then happy to be away on that particular day, and I came back to have a look at the market. And again, in this zone, so this was the afternoon of the 10th. Is there any trade that will ride the trend when it is trending? Yes. So as what I said earlier on would apply. If you take a trade, especially when I'm talking about major trend reversals, this is where I expect the trend to go quite far. That's my expectation. I don't put a take profit in the market. Okay, what I do is execute the trade, and then I just wait for the next pullback. When I get the next pullback, it allows me to move my stop to just at the level beneath or above the pullback, depending which way we're going. And I know my first trade is in profit most of the time, not break even, but usually in profit and get that pullback. Then I just sit and watch, and I literally just gotta sit and watch the pullbacks, whatever I need to do, bite my fingernails, walk around, get coffee, just hold on, and all I'm holding on for is to see the next pullback that comes, because the next pullback comes and the trend resumes, allows me to tighten my stop to that level, and just keep on until I see a clear reversal pattern setting up, which means you might enter into a prolonged trading range or a reversal of the pattern. Then I take my trades, I take my profits. So you can do that and really maximize your profits. And with major trend reversals, and we'll put that into one of the future sessions. It's really fantastic because you can just hold on to it, throughout that session. And if you have to go somewhere else, find a technical place to put your stop, and you may come back and be surprised that the trend has carried on. If you get stopped out, that's fantastic because you put it at the correct place. So yes, that's to your question. Yes, you can actually hold the trade. Now, with the one that I'm showing you, it's because there's just a lot of trading range price action, which gives us measured moves for you to say, okay, measured move, I can take my profit here if this happens. So, like in this case, so I was not in the market, but clearly you can see the market is going short. Came back here, tried to resume, double top, came back, and there's a resumption. And then we have this big candle that occurs. 1, 2, 3, third candle, like third candle after the news, bouncing off the 20 of the 10. You can put your entry there, but I'm only trying to get to that level. Now, here's another thing that I had earlier on. I had that leg one. You see back here. So that first move from the beginning of the day, the market did that, and there's a potential leg two. So I'm thinking, well, this move here, the market is trying to get to that, but immediately reverse. Can we get a little bit more? So it's a very tight entry that you take, and your stop is up here. So that's probably, I don't know, 0.75% that you took out of that market. Then later on, it's getting into the US session. And again, I'm seeing the continued bearish price action. There is a market move there, there's a pullback, there's a potential where I think the market is going to go. But where do I get into the trade? I see that breakout, big tails at some stage. I can't remember how it formed, but at some stage they've been a big bull candle, but sold all the way through almost to the end of the candle and follow through, but we have a reversal, and that's the candle that I'm prepared to take out of this because I'm going into trying to get to that level. Take the trade again. Your stop is up here, and I closed it just somewhere in this level. So that's probably also just a 1-to-1. Okay. Then let's go to the yen very quickly. Just show you what happened in the yen. Again, that same day. What I found interesting in this, one of the things that I do just for interest, and we'll look at it some other time, I always go back into my most recent charts and time frames, and I take out my piece of paper with my strategy, and I say, okay, how did I trade in this particular day? Because now there's no emotion, the day is gone. How did I perform against my strategy? And then you can start to weed out mistakes. You can start to weed out hesitation, unnecessary hesitation. This, so when you're actually in the market, how did you trade? And if you're not in the market, well, let me test my strategies, right? How would they have worked? Because you're training your mind to say, no matter what I see on this chart, whatever time frame it may be, I have to wait for the strategy that I trade, because when it comes, if I manage it well, I will make money. If I lose money, as long as I'm using my strategy, perfectly happy with that. So yen on this particular day, on the 10th, so I came in to open off the, remember the Asian session is starting when the Tokyo Stock Exchange opens. That's when I kind of got up and I'm fresh and ready to go. And I'm seeing this, I said, oh, that's fantastic. That's very strong. But let's see where I can get it now. I'm starting to trade here. So nothing is set up for me, but my eyes can look left, crossing the road, driving the way that I drive, look left and see what's happening. Still, that's the thesis, that's the argument, the bulls are strong, but I need to get in. I don't see where to get in here, so I just gotta wait and agonize as much as I can. And then get set up here. Could you have taken it? Sometimes I do, because sometimes I'm not concerned about the color of the candle. Okay, especially if I'm coming out of a strong trend and I get a first pullback, happy to take it. But now I've kind of almost gone sideways. I'm not entirely convinced that this is a turning point, so I don't take a trade there. And if I take that, my stop would have been here, so I would not have been stopped out. Remember, when I talk of stops, must be in a technical position. Otherwise, if you look to your left, where is the nearest place to put your stop, your price action stop? That's not too far away, and not too close. It's got to be the proper technical position. So then we have this. So I had that higher low. Market broke beneath that intent. Now, whenever you have like a double bottom, so that's market came down, went up, came down. With a double bottom and the market breaks beneath and resumes, that is a three push pattern. That is a wedge that is like a triangle, which gives you a pretty decent setup. So market in once, twice, three times. Or you could have said, well, just failed breakthrough beneath a double bottom and a higher low. I see that book candle. I need to see just a bit more confirmation of it. And I had confirmation, and I placed my order here, and I got triggered at that level. And again, now I have a potential zone to use for my measured move. So there's my measured move. Where can I take profits? There's a likely place to take my profits. So you enter in and you execute the trade. You just have to take the trade. Let's quickly check the question that's pop up. Okay, so you execute and you take your trade, and you can manage your trade, as I said, visually and see what happens, or you can take your profit. So I close my trade within that. Again, don't worry about this red line because that's from today, which has been the low of yesterday, today's session. We then had, coming out of that, a breakout and a pullback. Now, this first move here, the pullback was here. That one bar candle was a pullback. But because I was already in that trade, it's close to my trade, I didn't want to execute a trade there. So when I saw the breakout out of that pullback, and the follow through, which closed above that, and a couple of candles followed through. So, well, I'm gonna wait to see if out of that break out we get a setup. We got a setup. It's pretty close to my take profit level, but at this stage I'm putting my stop here, so that's going to be a 0.5 return, not a 1-to-1, which is fantastic. In a couple of hours trade as well, we take a trade. Then again, still the 10th March. Still that whole day. So later on in the afternoon, I came into the market, and here's another classic trade that I took. So trading range. Well, when I say classic trade, guys, all I'm saying is it fits into the parameters of how I trade. It fits into the parameters of my strategy, and that's why it's a classic trade that I have to take. So once you formulate your strategy, when you see the setup, you have to learn to convince yourself to take the trade. Okay, so there's a breakout, there's a bit of a pullback, there's a breakout beneath that. Then we have that candle, a massive candle that awaits a few bars. When I have red news at 3:30, at 3:45, I'm breaking the market. The market is already digested the move sufficient enough for me to start to see patterns. So now I'm waiting for a pullback. And there's a pullback, like I was speaking about earlier on. It's a bull candle, but look at it. It's closing near its low. It's coming off the 10 moving average. It didn't get to the 20, so there is a strong urgency by the bears to carry on. I've marked my leg one. There is where the leg started of this move, and there is where it turned. So at that point, I'm kind of aiming here. That's where the profit level will be. But I also have another measured move I'd set from the high of move here to this low, and I'm saying the market breaks beneath this range here. It's likely to get down here. So then I was able to take my profits at that particular stage. Makes sense? Could you have taken another trade there? You could have still, but still aiming for that, and maybe you could have pulled off stop here, maybe 0.75 for 1-to-1. So that you could have done, but I didn't go and take that subsequent trade. Then later on, this is much later on in the day, so I'm still watching. Market pulls back right to test the breakouts. This breakout here. So whenever you have a breakout point, market usually comes back to test it, so it pulls back to test that breakout point. Then at that stage, I'm waiting to see where can I get an entry to take. I really want to get a decent signal. So I see that I always prefer once I see an entry, especially for that kind of trading range, which is not a pullback like we have here. I prefer to see a close beneath the moving average. If it's not too deep, then I can take that. There's a little trading range. There's a measured move. Just take the profit out of there, make a quick 1-to-1 profit out of that. So that's the construct of the trades that I took that gave me that 10% return. I mean, total hours that if you add that return that was actually in the market, about 4 or 5 hours that I was in the market. But here is the point. Number one, whatever time frame that you're trading, if you're not in the market, you're not in the market. When you get to the market, especially on the 5-minute time frame, there are always opportunities. You've defined your strategies and how you trade. There are always opportunities to take your trades. So take the trades when they're set up and manage them. Manage them, either take profits at a predefined level, 1-to-1, 2-to-1, measured move, leg 1, leg 2, or if you're taking a reversal trade that might go far, then just manage it and move your stop whenever you get a pullback and execute additional trades as you go along. When you look at the daily candles, that's where we try to get our bias on the pair. So let's have a look at the daily. So the daily is absolutely critical because it gives you hints, gives you indications of where things are likely to go. Remember, the last thing you do on the daily is find the open of the day, depending where you are, and then the high of yesterday and the low of yesterday, because those are key levels of support and resistance. But when you look at it, you've got to ask yourself, and the word that as I use is the way you get the bias. Yes, let's use that word. Where are things likely to go? Just looking at this time frame that I'm trading. So far, if we just look at it, I would say to you, because market is bounced off this 10 moving average here, it's way off the 20 moving average. We have successive bear candles, we have a magnet, which is what can pull the market down here. I'm thinking you might have a leg 1, pullback leg 2. At this stage, I just have the bias that the market may go short. Now, when I'm coming, now remember, I'm not trading the daily time frame. I'm trading the 5-minute time frame. When I'm coming down to the 5-minute time frame, it's there at the back of my mind. And I would have marked the low of yesterday and the high of yesterday. My bias, because of what I'm seeing, is that we might get a leg 2, which is we're going to go short. So if on the 5-minute, the market starts to move in a bearish direction, and I start to see coming to view the low of yesterday, and we break through that. If I'm not in the trade, I'm going to wait for the pullback to test that breakout point, the point of yesterday's low, because that pullback will come, that test will come. It may come as the first entry or a second touch. Then I'm going to have confidence to take the trade and then hold it for as long as possible. hold as long as possible and see how I can tighten my stop as I go along. So that definitely helps me in shaping my mind so that I don't curtail my profits, as an example. If you look at the CAD, for example, now here we are in a double bottom position. When we got to this level here, 1.24679, there was an immediate buying into the close by the bulls. The next day, a doji has been created. So a lot of buying pressure. At some stage, it was a bull candle, but then it closed as a doji. Uncertainty, market has decided where to go. The next day, yesterday, with a strong candle, the bear candle closed near its level. The question I got to ask myself, if the bears are strong, why couldn't they just close 4-5 pips below that so that we know, they've got strength? So I'm at the bottom of this level. It's a potential double bottom area. And now, when I look at it, I just got to wait when I go down to my trading time frame, 5-minute time frame. Okay, so there's a CAD. So here, I'm not surprised by this bullish price action at this present moment, but I'm trading this time frame. So I've got to wait now to see, will I get a break beneath this? So if I get a break beneath this, there's a pretty strong break beneath this level. The bears are strong, successive bear candles, a resumption, then we can look to go short. But the bias at the moment is long. So I gotta wait to see, am I gonna get a decent enough pattern for me to trade and take long? Quick look lastly on the yen. So the yen, we're coming off this hidden level of resistance. We're going sideways. I'm expecting that will be a test of the 10 moving average with such a strong trend. So the low of yesterday is a key magnet that I must just keep my eye on. I think we deleted the red line when we're looking at the 10th of March, but I'll put that back on. And if I get a decent enough bear setup, then I'm going to go short. Guys, we have come almost to the end of our 1 hour. Really enjoyed the time. Thank you for participating. And I'm going to hand over back to Angel in the office. Thank you, guys. And we'll catch up with you this time next week.